What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the overall market and what Elon Musk just said involving the markets, what his view is from a macroeconomic standpoint, why this is very important to consider moving forward. Before I break anything down about all this information, before I get into any more details, let me just mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each valued up to $3,000. And the best part is, any could be a free Tesla share. The offer ends very soon, in just about 5 days, so check it out before they run out. With that out of the way, let's get on with the video. So looking at SPY, like I said before, this thing is technically still closer to all-time highs than it is to new lows. And now the real question is, what's more likely to happen, right? Could the market break to new lows? Now, Elon Musk gave us a very interesting point about this, or at least it is somewhat relevant. He mentioned that many companies are going to be going bankrupt within the next 12 months. He said this during the Tesla shareholder meeting. And he also added very recently that many banks are on their way to the cemetery. And he basically said that there's lots of pain coming. So this is all very, very important news because Elon Musk is warning us of a recession that's going to be more severe than what people are expecting. He also mentioned that the Fed, in his opinion, over tightened, and he thinks that the Fed should, start to cut rates relatively soon too. We could have different views on that, but that depends on inflationary numbers. And right now, looking at like JP Morgan, they are anticipating that we might see, not JP Morgan, sorry, Goldman Sachs is anticipating that we may see an increase in inflation very, very soon. So be very careful around like periods like this. Now, when it comes to the longer term future, what's going on for the markets, for now, the market is holding up because of one big thing. One of the big things holding up the market, at least, would be earnings. Earnings have been very strong compared to what expectations were so far. Many people were expecting bad earnings from like Apple and Tesla and Nvidia. Tesla did relatively well. Remember that? Apple did relatively well. Amazon did okay slash well. Google was okay. And then we have Microsoft that did well. And then Nvidia just killed it. You guys saw how Nvidia moved. That was incredible. But the point I'm trying to make is we're not seeing the real earnings recession just yet. It is likely going to happen later on. Okay? And on top of that, the Fed is likely in a state where they may pause, but that will depend on inflationary numbers and what the current expectations are for inflation, what's currently happening with the numbers. They did mention something else, which I find very interesting. The Fed said they're not going to be cutting rates until 2024, but the bonds market is pricing in a Fed rate cut for 2023 by September or even during Q3. Now, why is this important? Because the bonds market are not agreeing with the Fed. The bonds market could be implying something different, though. Sometimes when the Fed cuts rates early, it's because things start breaking. And when they raise rates this aggressively, that's typically what ends up happening. Now, looking at some economic variables, you can look at the Federal Reserve's overnight reverse repo. That's very important to consider. When this is rapidly growing, like it was in 2021 and 2022, that tends to allow for more excessive lending for the banks while they end up earning a predetermined rate. That's part of what many people consider to be excessive liquidity within the financial systems. And what's interesting is many analysts are projecting it to start declining. Excuse me, sorry guys. It to start declining very, very hard from here. Now, if that's the case, if we start to see the reverse repo drop very hard, this is going to make things harder for the lending of the economy. It's going to make things harder for the banks. On top of that, with less lending, we're going to see a big change in the credit markets, potentially a big tightening of credit conditions as Americans start to face financial hardships, unfortunately. My heart goes out to all Americans who are struggling, but you have to look at the effects of high inflation. Americans have been losing lots and lots of spending power, and they're getting into more debt than ever before. People are losing money, they're struggling, and it's very hard for them. And I understand. But Americans have been borrowing loads and loads of money, and we're seeing all-time high credit card debt just continuing to perpetuate. The problem with this is eventually we have to start paying back the money. And it could lead to a very bad situation. I know Americans are resilient. We're going to overcome this, but it could lead to a big amount of pain for banks, like Elon Musk is warning. So Elon Musk is saying that the pain that the banks are going through is not done just yet, as we're seeing lending dropping very hard, harder than what we saw earlier during the year. On top of that, if you look at mortgages, I mean, they're once again crossing back over 7%, and demand for mortgages is just dropping like crazy. People are just not buying into mortgages. They're not buying houses like before. And this is leading to another big issue because if you go back to like, I would say 2020 or so, we saw this like drop and then another surge, especially by 2021 in housing, right? With the low interest rates, people continued to buy up these deals. And what was expected to happen was more people would continue to buy and buy and buy. So we had to see demand keep up with supply back then. And then the expected demand was continuing to be high. But the problem was a lot of the people that started building these houses were not anticipating the macroeconomic conditions or anticipating what was going to happen accurately. And they started building so many houses over and over again, right? But the problem is there's high supply, but now demand is falling. Demand is falling, which is likely going to lead to what we're going to see in the housing market as prices start dropping. Now, this is very important because assets are going to start losing values. And for many securities, especially the ones backed by mortgages, this could lead to even more pain for the banks, right? It's just worth noting. Elon Musk has been implying this. Many institutions are expecting high inflation or another increase in inflation as we approach the summertime. I don't know for sure about it, and I don't really want to expect, not necessarily expect it, but more like, uh, yeah, I would say like expect. I'm not going to try to expect it or just guarantee it in a way like that, but I want to be prepared for it. There's a big difference between expecting it and trading in that lens and being able to anticipate it and being prepared for it, right? So that's why you have to be very open minded in a market like this. So what's happening with the markets? Yeah, we're holding up nicely, right? The market's holding up nicely. It's not the end of the world. But the question is, could something happen later on to cause the market to slow down? Yes, it's still very, very possible. And Elon Musk is warning that there's going to likely be an earnings recession. He said the Fed has over tightened, and he said there's pain to come as bankruptcies are going to continue to increase. So, yes, this could lead to some pain for the stock market later on. I'm not seeing indications of it starting like immediately, okay, like a massive, massive crash or something like that. Not seeing it just yet. And that's why it's important for us to be very open minded and to be very, very patient. Now, here's what I'm talking about when it comes to the crash, okay? We need to not look at new lows right now. We have to look at confirmation at the lower levels. First off, look at the weekly 50 EMA. It's at 401 at the time I'm recording this. First, we have to break that. Then we have to look at, right, the next important levels, which are going to be 390 flat, then 377 to 380, right? When you trade, and I know I'm not giving financial advice to buy or sell, but when you trade, in my opinion, it's very important to look at levels because you can't just, for example, just a hypothetical example, you can't just short SPY when it was falling from like 420 and expect it to just crash to like 390 immediately. Because when we hit some support, let me just show you what I'm talking about. Let me show you what I'm talking about. We bounced off 409 instead, right? We ended up holding 409. We didn't go to new lows. We bounced off 409, right? At least during the time I'm recording this. So the point I'm trying to make is we have to watch these levels carefully. I don't really like to talk about new lows, but it is still a possibility because of the banking situation, the credit markets, more black swan events, inflationary numbers, and a potential earnings recession to come later on, as Elon Musk has been warning about. I hope that's as clear as possible. I also want to note that it's very difficult to predict the long term future, or at least the medium term for the markets. I do believe there's likely going to be another major pullback coming because of the gaps in the markets and the current macroeconomic conditions. But I don't want to talk about new lows or anything like that until we start approaching major support levels. And I think that's the way to go about a market like this because the market's been very volatile. It's like you could look right here, for example, right? We hit the October low. Whoopsies. The October low was like at 345. We pumped all the way up to about 4 07, then we started to reject. And if you started panicking saying new lows are coming once we hit like 373, instead we bounced off the support, then we went to 416, right? You could cry about the crash to new lows off 416. Instead, we bounced off where? 377, the next major support, which is where the algo started buying again. The market has held since, hasn't really crashed extremely hard. Could it happen? Yes. Could still happen, of course. Most definitely. But I just want to warn you guys to watch for confirmation and always be open minded at the same time, because you should always be prepared for more major downside just in case. It's still a possibility, right? Keep this in the back of your mind based off what Elon Musk is saying. I think he's correct. There is going to likely be some pain to come, especially for earnings, for companies, for everyday Americans, for people, because of the recession that's coming. Unemployment's going to start going up very hard soon. Okay? It's tough. It's the truth. But like I said in all my videos, for the medium term, this will be tough. For the next 12 months or so, Elon Musk is estimating it's going to be for 12 months. It's going to be tough. I can't give financial advice, but this is the time to be very careful with spending. As inflation is still high, this is a time to be frugal. This is a time to be careful. This is a time to be ready and prepared for the worst possibilities. Because unfortunately, you could lose your job soon. It could happen, okay, in the next year. It really could happen. And the best thing to do is to be prepared. The best thing to do is never ever give up. Don't put your head down and believe you will get through this, because I believe you will. And secondly, like I was saying before in all my videos, the long-term future is still very, very bright. You have to remain optimistic. Don't become negative. Don't let negativity dictate your life. The long-term future is bright, as Elon Musk was saying. He said it's going to be tough for the next 12 months, maybe, in his opinion. But he said afterwards, Tesla's going to break all-time highs. He said Tesla's going to kill it and explode. And I believe it's going to continue, as many people have lots of growth to come. I believe many heroes will be created during times like this. And I just want to warn you guys, okay? I know this video is kind of like arbitrary in a way, because I'm not going to way too many specific details about like price action and things like that. But all I want is just to keep what Elon Musk is saying at the back of your mind. I'm not talking about like a crash to new lows or anything like that. I never said that's going to happen right now, but we need confirmation first before making a claim like that. On top of that, just be warned based off what Elon Musk is saying. He has studied economics in his life. He most definitely understands our economy. And on top of that, it's very important to consider what he's saying, because millions of people listen to Elon Musk, and he has said countless true things, in my opinion. All right, guys, that's what I have for this one. I just wanted to warn you about this. He made more claims about the recession to come on CNBC. He mentioned that hardships will perpetuate, but he said, once again, to not let this get the best of us. All right, so thank you for listening. Have a great day. Hope you guys are enjoying the weekend. I have some merch for you guys if you're interested in buying anything. And also, don't forget about the Webull link. The offer ends very soon. Deposit any amount of money and you're guaranteed up to 12 free stocks. Offer ends in just 4 days. Thank you. The market is still going to the moon for the long term, despite the short term and I would say like medium term potential pain that could come from earnings later on during the year. I don't know the exact date. I don't know the exact timing. I don't know exactly how low the market will go, to be honest with all of you. Okay, I don't know for sure. And it's best to just be open minded and be prepared just in case, as there is still potential pain to come in this economy. But the long term is still bright. For the short term, the market is still holding up all right. So it's not really like crashing too hard or anything like that. So just be patient. Okay, be very, very patient. And we'll see what happens moving forward. Thank you for listening. Have a good one. Enjoy your weekend. Enjoy Memorial Day. And peace out.